Welcome to Jennifer Hoffert from TD Bank, and please take it over. It's all you. We usually do like a half an hour, and so feel free to kind of go through your thing, and then at the end we will stay on, and then you can pop off.
Sounds fantastic. Okay. Sorry, I'm just going to get this into presentation mode. It always takes me a few moments on my computer, so just bear with me here. And yeah, my apologies in advance. I'm getting over a cold from my son who's in kindergarten, so it's yeah. If I go a little scratchy, that's why. Okay, so just bear with me for a moment. It's coming up slowly here. Can you see my? Oh, almost there. Okay, it will just take me a moment to switch this over from presentation mode, but all your lovely faces are in the way. There we go. Okay. Gotta love technology, right?
What kind of slideshow presentation is this?
It's a fancy one that head office made.
It is very fancy.
Yeah. So you should be able to see my screen big now, Pete. Yeah. Okay, great. So yeah, today we're going to talk about a home equity flex line. And like I said, this was a presentation made by Toronto. So I'm going to skim over some parts really quickly. And then if there's any questions afterwards, can answer them for sure. But yeah, we can have some good dialogue going.
Can I ask if this is as interesting as the live, not so live presentation was?
This is
Okay, never mind. I'm going to withdraw that question. Go on.
Yeah, I know with all the hi, I'm reading my script here with the announcement. Yeah, I hear you on that one. No, this is more into the nitty gritty of things and the mechanics of it, as opposed to that was more like, hey, here's our big announcement. Read this script, person in head office. So, anyway, we'll get into the nitty gritty of it here then. First of all, yeah. When I leave this presentation today, there's going to be more information for you. So you won't be left on your own for FlexLine. We're going to be updating our broker information kit. There's going to be like job aids called about the FlexLine, comparison charts, and that sort of thing. So there will be more information available to you. So today what we'll cover is we'll go through what a flex line is, how it's different from a mortgage, talk about educating your customers as to what product they can choose. And you're the experts on this, so I won't go too much into that part. I have a sample of a commitment and pre-approval letters, and then I can show you what submission system are you using for point of sale?
Mainly Velocity and then also Filogix.
Okay, so I can show you what the screens will look like when you're submitting through Filogix. Okay. So yeah, the flex line, let's talk about that. A mortgage, as we know, declining balance, goes down over time. At the end, the client has paid back all their money and the interest, and they'll be mortgage free. The flex line is an alternative that offers clients the flexibility of a term portion, like a mortgage, and a line of credit in a single product. It will go up to 80% loan to value. Anything over 65% loan to value must be in a term portion, and basically gives you immediate access to revolving credit to access your equity portion. And of note with ours, like all flex lines work the same. So you don't automatically, the client will get access to the revolving credit. They don't have to request it. They don't have to do anything different upfront or make a special request to access the revolving portion. It's automatic as they pay down. Okay, so we'll take a quick look here. I'm just going to get out my laser pointer at the two parts of it. So we've got revolving portion and term portion. So the minimum total flex line you can do is 20,000. So just like our mortgages, it's you can't do a mortgage for more than 20,000 with TD, and therefore the minimum revolving portion you can do is 20,000. For a term portion, the minimum you can lock in is 5,000. And the maximum loan to value for the product is 80%. So the maximum revolving portion needs to be 65% loan to value, but the maximum term portion you can do is 80%. Rates for revolving are just variable rates based on TD prime rate. Whereas the term portions, you can do fixed, you can do variable, you can do anywhere from 1 to 5 years fixed close. And this is new. You can actually do a 3-year variable closed or 5-year based on TD Prime. So we don't currently offer the 3-year through our mortgages. There's no amortization for the revolving portion, but for the term, you can set the amortization up to 30 years. And repayment for revolving, minimum interest only, no restrictions. They can choose to pay a fixed payment amount. And they can set these up automatic payments, but this part has to come from a TD account if they want to do the automatic part. So they can do fixed payment amount, 3% of the outstanding balance or 1% of the outstanding balance. Okay, the term portion payments can come from anywhere, from any institution. And it's similar to the mortgage. So principal and interest payments, payments can be up to doubled over the original principal and interest. And we can do prepayments on this up to 15% of the original principal per calendar year. So the same as our mortgages. So benefits, I mean, you know the benefits of it, but you can do customizable revolving and term portions. You can do purchases up to 80% loan to value. You can basically choose what size you want as revolving. And yeah, the term portions can be amortized up to 30 years. So definitely a flexible product. To make payments on it, you can go to any TD branch. You can make payments through EasyLine, EasyWeb, at an ATM, through the mail. You can do pre-authorized payments. It basically works like a big bank account. And yeah, the additional features is you can access it using a bank card, an access card. You can order free personalized checks on us. Clients are going to get a monthly statement, and then they'll get an annual statement for the term portion of things. My recommendation for everybody who's setting one of these up is to, after it's funded, send your clients into a TD branch. And at that point, the branch will be able to set up a bank card for them, link this to the home equity line of credit so they could access at an ATM if they needed to. They're going to set them up on EasyLine, EasyWeb, and so that they can have all these access options. Okay, so important definitions we'll go over. So the first one is the credit limit. So this is the maximum amount of credit available to the customer on the revolving portion. And this can go up to 65% loan to value. The original plan limit is the total amount that we approve them for at the beginning, including any revolving and term portions. And this part can't go above 80% loan to value. The current plan limit, that's just, if you took a snapshot at any given time, it's the combination of the total credit limit plus the outstanding balance of any term portion. And the available credit is basically any payments you make towards the principal immediately become, oh, my boss, Tony, is just asking to be let in. I'll let him in. And maybe should I introduce him? I'll pause for a moment. Hi, Tony, are you there? Okay, well, we'll wait. I'll introduce him at the end. So yeah, any payments made towards the principal or the term or revolving portions are immediately available for your customer up to their credit limit. Ooh. Okay, we're just gonna skip the video, but yeah, why FlexLine? So it's got flexibility, convenience, a revolving line of credit. You can do multiple term portions in it. You can actually do up to 40 term portions. At initial application, you can only, as a broker, you only have access to one at funding, but subsequent term portions can be set up at the branch. It's a really customized solution. Yeah, because clients can do part fixed, part variable. And yeah, bottom line is a client can use it for whatever they want to. So they can buy a second home, they can pay for renovations, consolidate debt, buy a new vehicle, buy a new trailer, or whatever they want to for that. And yeah, they only pay interest on the amount they borrow. So a lot of customers elect to keep it for future use once they've paid it down. Okay, so how do we qualify for this? So the qualifying rate will be the greater of the benchmark rate for Bank of Canada or the revolving rate at plus 2%. So initially we're going to launch these at prime plus 0.5%, so to give you an idea of that. For payments, qualifying payments will be based on the original plan limit, so the total amount up to 80%, at the corresponding qualifying rate using a 25-year amortization. So even though they may be able to have that 30-year term inside of it, they do have to qualify at the 25-year amortization. Okay, so I'll differentiate this because it's a bit confusing. So at TD, we've got two rates for you. We've got our TD mortgage rate. So mortgage prime is currently 2.6%, and it's the base interest rate that we use for our variable interest rate mortgages. TD prime rate is what we use for revolving credits like the flex line and unsecured lines of credit. That currently is 2.45%. And yeah, that will be used for the variable term portions inside of a flex line as well. Okay, now you may be wondering, oh, well, if this rate is lower, do I get a better rate? But the effective rate or the net rate that you're getting will be similar or the same rate. Basically, it would just be expressed in a different, like prime minus or TD mortgage prime minus or prime minus, if that makes sense. Okay, TD protection plans. If you do mortgages with TD and have referred these, you'll know that they're quite easy. All you do is you send a referral in, and someone from our credit protection area will contact your clients. You get paid on it as well. And so if you do make a referral with CP, it is available on the flex lines up to $1 million in coverage. We'll cover the life portion and critical illness. And yeah, it's pretty straightforward. All you have to do is make the referral. If you're not having the CP discussion or the insurance discussion with your clients already, this is an easy one to do. Okay, so educating your customer. I'm not going to go through this too much detail because I know most of you are experienced brokers here, but we've got a job aid just to help you with which clients might be a good fit for a flex line. The only thing I'd point out, is if you have those clients that are struggling with making payments and have a lot of debt and run up their credit cards, they're probably not the best folks for this. So. And yeah, when you talk about a flex line, you'll have to disclose, how it works, clarify the different rates within it, talk about the annual interest rate, admin fees. Now, there isn't like a monthly fee for this. So you can have NSF fees but other than that, there's no regular fee for it. The trigger rate. So if your client were to do a variable term portion inside the flex line, if interest rates go up, we don't call in a payment until the outstanding amount. We just accrue the interest and tack it on to the end balance, and we don't require the clients to increase their payment until the outstanding amount gets above 80% of the current market value of the property. Prepayment privileges, as I mentioned, they can do 15% per calendar year. Prepayment charges, collateral charge is the same as what TD currently has. And so they can register up to 125% of the value of the property for future increases. Property taxes, we will not collect with this. So I wouldn't recommend it necessarily anyway, but the clients would have to pay their own property taxes. And yeah, so initial launch to market. So first of all, we'll be able to do flex lines in first position only. We'll be able to do them for purchases and refinance of existing TD mortgages and existing TD home equity flex lines, as well as other financial institution. At initial launch, the following application types won't be eligible, and it's more a system requirement or a system issue that we have right now, but they're hoping to bring these things in down the road. We just wanted to get this out to market to have it available to you as soon as we could. And so we won't be able to do flex line increases. And so that's if a client wanted to keep the same account number, they wouldn't be able to do that. You'd have to do it as a refinance instead. We can't do concurrent deals. We won't be able to do second position behind an OFI flex line or another TD mortgage. We won't be able to do a split flex line or a flex term option at initial launch. And the flex term option is basically TD or the flex line version of the port. Okay, so we won't be able to do a port at initial get-go. Open term portions we can't do, but they could just keep it revolving, and that would do the trick. And rate buy downs, we don't currently offer a buy down on variable rates for our mortgages, and we won't have the same buy down for term portions either. Okay, so let's take a look. So there's three different commitments or pre-approvals that you could receive. So the first one would be if you did a flex line with just revolving. The second example would be if you had a revolving and a fixed rate term portion. And then the third would be is if you had a variable rate term portion. So I'm going to show you a little bit about what that looks like right now. And I'll just zoom in here so you can see. You'll recognize that they're pretty similar to TD's mortgage commitments. So we've got, the borrower's name, address of the property. Okay. And then on this side, we've got here the original plan limit, the credit limit, the rate on the revolving portion and what today's rate is on that. The term portion, so what the fixed rate is, and the principal amount, annual interest rate, term, amortization period, payment frequency, and the payment amount. Okay. We've also got important dates on here. So it's telling us what date that rate will be held until and what the commitment expiry date is. Okay, if we flip to the next one, this is all pretty straightforward. It's basically standard conditions. So, the lawyer branch selection, that sort of thing. And so this is all things that you would see on our regular commitment. And then if we're looking at the next page, we've got here details on what you wish to register the collateral charge as and prepayment details. Okay, so it's pretty straightforward. The next one I'm going to show you is what it would look like for a pre-approval because it's slightly different. So we've got the customer's name, original plan limit, credit limit, revolving portion, term portion, and if we, get to the next page here, it's going to show us the dates and what rate is held, what the term is, and how good the approval is. It's how long the approval is good for. Okay, so what's it going to look like when you submit? So this is, you know your systems better than I do. I don't know your point of systems at all, but I'll zoom in here so you can see a screenshot. Okay, and so basically, if you're submitting, maybe a line of credit with another bank, it's probably going to look really similar to what you're doing with them right now. And so you would put the original plan limit under the first mortgage or the first mortgage amount. Okay, and then on the next screen, sorry, zoomed in on the wrong place there. You would select what type it is. If there's no term portion, you would enter prime rate. If there is a term portion, you would enter the posted rate, and then you're going to put in details. So for rate type, you would put if there's no term portion, you would put rate type variable, term open, frequency monthly, compound period monthly, term 5 years. If there is a term portion, you're going to indicate it on there. So variable or fixed, term type closed, frequency monthly, and then compounding period there. And then obviously the details of how long the term is and what rate. Okay, and then I think the key here at the bottom is under your lender notes. You're going to really want to detail the advance amount requested by the customer at closing, because we know the client can, set up a line of credit for 400,000, but only be needing 300,000, and put a detail in your lender notes as well. Okay, and like I said, you're the experts at this area. You know more than I do. Yeah, so as I said before, we've got tons of resources coming out for this, so you won't be left hanging on your own after this call. And yeah, now you should be able to describe what a flex line is, talk about educating your clients. You've seen commitment, pre-approval letters, you've seen a bit of what Philogics looks like. And so we'll get into the good part, like what questions do you have? Probably how you're going to get paid. That's the number one question. Yeah.
We can get to that. I mean, if you want to cover that off right away, sure.
Yeah, let's cover that off. So payment on this, you'll be paid 75 basis points plus volume bonus on the term portion that you set up, not advance. Okay. On the remaining revolving portions or the revolving limit, you'll be paid 25 basis points at the initial funding. And then after 90 days, we'll do a look back and look at the average balance over the last 90 days, and we'll pay you an additional 35 basis points on that.
So is that 25 basis points, is that being paid on the limit or the amount that's drawn initially?
That's just the limit.
Okay.
And then if there's a draw after that and it's maintained for the 90-day average, we'll pay the 35 basis points on that
Gotcha.
after the point. Yeah. Okay. So Chris, I have a question from Chris. Is this product portable? So I'm going to give you a yes and a no answer that you might not like on this. And so currently, if you were to do this at a branch or through our MMS channel, they do have an option to do a flex term option, which is the version of the port. Through broker channel, we don't have that option at first launch. And so if a client had an existing mortgage and wanted to say port it into a flex line, they would have to pay out any flex term or any mortgages and pay the penalty and then set up the new flex line. Does that answer the question, Chris? Yeah. Okay, great. And we're hoping, like I said, this is the initial rollout. We're hoping to have more as we go through, but yeah, that's the initial launch. Hey, what other questions do you have?
Yeah, I'm just a little bit, I wanted to maybe have a little clarity on the interest rate. So the mortgage prime is 2.6, the TD prime is 2.45. So what is the HELOC portion of this? Does it go on TD prime? Because I think that's what I heard, but maybe I was wrong.
That's correct. So all of our mortgages are going to be at mortgage prime. All of our anything to do with the flex line is at TD prime.
Gotcha. So the variable rate component, if you have an amortized variable rate, that's at the 2.6 minus whatever. And then no.
So if it's inside, if it's a flex term option, or if it's a term portion inside of a flex line, it's going to be at the TD prime, not TD mortgage prime.
Oh.
Yeah.
What's the difference?
Okay.
15 basis points. Yeah, I know.
We can hear Sue over there.
Okay.
So, okay. So if it's under this umbrella product,
yeah,
and there is a term, but it's variable, it'll actually be at the better rate of the 2.45 minus whatever.
Yes, but you're going to get a similar net rate and a similar discretion off of that as you would to a mortgage product. And so say if you're getting like 1.35% net, you're going to get 1.35 net in
it'll be a wash across the board. It'll be the same.
Just the discretion will look slightly different. Gotcha.
And then the line of credit portion, so the HELOC, to use the kind of the regular term, is going to be at 2.45 plus 0.5%.
That's correct. So that's why we're launching it at TD prime plus 0.5. At the branches currently, like it's the rates are tiered, and so like for example, if you were to do a flex line for 400,000, you're going to get prime plus 0.2. So I expect we'll have something like that come down in terms of pricing, but I don't know what the protocol or what the request process will be for that yet.
Is there a branch meeting required?
No, there is not a branch meeting required. So same process, you would either sign with the FCT or the solicitor, whatever your client chooses with that. Because this works like a checking account though, I do recommend an initial visit to the branch after it's funded, just as I said, to set up that access card, set up EasyWeb, EasyLine. They can order free checks at that point, but it's basically like a one-time visit just to get the physical things.
So I know you mentioned the branch meeting is kind of optional, and it's a good thing to have. That's fantastic. Is there a limit on the number of borrowers that can be on the application?
We can do up to 4.
Is there any monthly fee to having the account?
No monthly fee for it. The only fee you might get charged is an NSF fee if you were to go to the limit on it and bounce a check or a payment. And that's $48 if they did that.
Gotcha. There was a little bit of mention in there about trigger rates and about how if the loan exceeded 80% of the market value, is TD going through and proactively kind of looking at their portfolio and saying, well, let's auto value this property? Or is that just not going to happen until a client actually decides to do something? Or where's that trigger rate coming into effect?
Yeah, so that would only be if like we had interest rate, because what we're looking at is I've worked for TD for 19 years and haven't seen this happen in my career. But if like the rates go up and then the client hasn't increased their payment, we'd just be tacking that extra accrued interest onto the end of the mortgage. And so yeah, if that, our systems will kind of look at it, and if that value is above 80% of what we have as the market value, like which would have been when they initially did the flex line or the mortgage, then we'll call in a payment. But the client can also provide confirmation that their market value has gone up and that it's not actually 80% of market value.
Gotcha. And that's typically
Yeah.
why it doesn't tend to happen. Like that trigger rate never gets triggered because we've been in a market where rate or the property values have gone up. So it's
Yeah,
easy to justify after the fact.
absolutely. Yeah, and recently declining rates, but even yeah, they, like at the same time, you can think of your client as making regular payments to reduce the principal, and so yeah, it would have to go pretty high for us to call that in.
What is a split flex? I can't remember what it was called. You mentioned something
Yeah.
about a split, and I'm like, I don't even know what that is.
Yeah, so there is an option, and this has to be done at the branch after the flex line is funded. But some people might want, two separate parts to their flex line with two separate revolving limits. So maybe you have like a couple of partners that are buying one property but want two separate, I guess, mortgage or flex lines on it. And so yeah, that's what we would refer to as a split.
One more question. Sorry, I really bombarded you here.
No, this is good. This is
What
great.
about, so you've got submissions through Filogix. What about through Velocity? Like, is there a way that we can do the same kind of submission, or should we just essentially put a whole bunch of notes in there and then the underwriter can straighten it out?
Yeah, I would say I'm not sure if they're going to make more job aids, but I would say if you're submitting a line of credit through any other institution right now, that are the screens would look this similar to what you'll submit to us. But yeah, as I said, the key is going to be in your notes to say, hey, this is what we want in the end of things.
Okay, other people's turns now.
Yeah, that's great. Yeah, what questions do you have? I think you asked them all, Pete.
I didn't mean to. I was writing my notes as we were going through.
Yeah.
That's usually
And
my
I can see
job,
that
Pete, so well done.
Oh, yeah, Deb, are you sure there's no hard questions? I didn't bring Diane. Diane couldn't come this time. She's usually my backup to answer anything if I get stuck. But yeah, I did want to introduce my boss is on here, Tony Gill. Now he just wanted to join in and say hello. His camera on his computer is broken, so you can't see him right now. But yeah, I did notice that Tony is joined.
I'm calling BS. I think it's a messy room.
Okay, you got a thumbs up. I think that's where we're going to be left with today. Yeah. So any other questions from anybody? Yeah. Okay, he says he can't figure out the mic either. He just sent me a message on this. So for FlexLine first day, you'll be able to submit an application is January 10th. And then, yeah, please reach out anytime between now and then or after then. I'm here to help you out. And yeah, looking forward to connecting.
All right, so first date of submission is January 10. Is that like at 12:01 p.m. or 12:01 a.m.?
But that's a great question. If you're up that, yeah, give it a try. You're gonna break TDMS.
Yeah, there might be a few people waiting for this.
Eastern?
Yes.
Pacific.
I unmuted so you could hear Sue.
I just said, is that Eastern or Pacific?
Yeah, I don't know specifically, but yeah, whatever time you're awake, you give it a try, see if it works. Okay, super. Okay, well, I'll let you get to the rest of your meeting, but it was lovely to see all your faces, and yeah, keep in touch and reach out anytime.
Awesome, thank you so much. Is there
Okay.
anything that we need to do? I think we kind of covered this on the last meeting, but are all the brokers, they all have access to TD at this point?
Yes, I believe so. I don't know if I've set Lindsay up with a profile yet, but I can double check that because I think everybody else has done at least one deal with TD at some point.
Yeah.
Yeah.
Mostly,
Yeah.
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 Brent, have you? Yeah. All right.
Yeah. Yeah.
Will? Yeah, I remember that Brent one. No, Will hasn't. Okay. So for
Okay.
anyone that hasn't, please connect with me afterwards, and then we'll link up with Jennifer and we'll make sure that you're set up.
Yeah, and what I can do is I can have a label set up for you on our systems ahead of time so that when you press the button to submit, you're already in there and it's recognized and you're ready to go. So yeah, Pete, if you want to actually, Pete, if you want to send me like a listing of your office
Yeah,
again,
I'll
I
do
can
that.
go through and cross-reference and just double check to make sure we haven't missed anybody.
Perfect.
Okay.
Well, Jennifer, thank you so much for being with us and for sharing all that info. It's definitely exciting to see more products in the mortgage space. I think that is something that is always a benefit to the entire brokering community. So thanks for being here. And Tony, thanks for showing up. And we'll sorry to call you up.
It's all good.
Thank you.
Okay, we'll talk to you soon. Thanks, guys.
Okay, thanks.
Bye.